Hi, I'm Gaviola. Welcome to the Peak on Global, where we break down what is trending in the business world and what you need to know to stay ahead of the curve. Joining me now is Chang from the Peak podcast. Welcome, Brett.
Hey, Ann, great to be with you again.
Let's talk about something that is up, or rather down, with the housing market. So from the two big ones, of course, Toronto and Vancouver, all the way through to, the Montreals and a myriad of other spots too, there is a cool down or a slump underway, depending on who you talk to. We seem to be shifting from the seller's market of all sellers markets at the height of the pandemic to something closer to a buyer's market. What do you think of all this, Brett?
Well, in times like these, it's important to keep perspective. And really what's happening is a correction just back to the pre-pandemic norm of the housing market. So if we look 2 years ago, all we're trying to do is correct back to those prices. And so it really did have an impact that low interest rates and that the free-flowing cash that was available to home buyers really did spike that market. And we're simply coming back to there. Now, this will make it more affordable, but as I think many Canadians know, it's still out of the reach. Homeownership is still out of the reach for many of them.
Yeah, we talk about, it is more affordable than it was previously when it was extremely unaffordable. But here we are today with much higher interest rates than we started with in March. And as you mentioned, even though home prices have come down, they're still pretty lofty in those major urban centers. Rents have made a big comeback. Inflation is still a really big factor. So I think despite all these gyrations in the housing market and prices and activity cooling, it may still be really unaffordable for many who are still trying to get on that property ladder, right?
That's right. And, that's not changing anytime soon. As interest rates go up, it's becoming increasingly difficult for Canadians to get into the market because the mortgage rates are higher, plus inflation, plus a potential downturn in the economy, that we're looking at a perfect storm here that's not going to make it any more possible for Canadians to get back into that market, even if they want to.
Okay, let's switch gears a little bit, even though housing, we could talk about that till the cows come home. Tim Hortons has been in the headlines a fair bit this past week. I want to talk about what it's offering customers for violating their privacy via the Timmy's app, and that is free coffee and a donut. Does this sound right to you, Brett?
Well, I think what we're looking at here is a bigger problem. As we enter a more digital world, privacy violations like this are just inevitable. They're going to happen more and more. And now we have laws that should punish these companies for these types of actions. And in Tim Hortons' case, they were illegally tracking the data of anyone using the app. But we just don't have in place the repercussions for those companies, the consequences for us consumers, what that looks like. And so what ends up happening is you have these class action lawsuits where a negotiation happens and the companies come to terms, but we just really haven't built out what that mechanism looks like as to what consumers can expect in return.
Yeah, I'm going to pick up on that thread here and go on a little bit of a rant because this seems to me like it's part of a trend. So in the case of this Tim Hortons story, the latest one, $10 worth of Timmy's food, let's call it that, for violating Canada's privacy laws. Years ago, you may recall a $25 Loblaw gift card for 16 years of artificially inflating the price of bread. And more recently from Rogers, a handful of days worth, knocked off your cell phone or internet bill for days worth of chaos. How is this okay time and again?
Well, it's not, Anne. And I think a good example or a good case study to look at would be the airline industry. The government has slowly, but it's happening faster in the US and in Europe, but governments around the world are now looking at airlines as how can we return to customers the value that they've lost if a flight was canceled or if a flight was delayed. And I think a lot of those policies should be brought to other industries and likely will be brought to other industries. It's just taking time, and it should happen a lot quicker because as a customer, if you're the victim of a bread fixing scandal that lasted for 16 years, you are likely owed more compensation than that gift card you just mentioned. Same thing with the Rogers outage. The Rogers outage caused major harm to people's lives and their ability to function in society, and they definitely deserve more than what they're currently being offered. And so I think institutionalizing what that code of conduct looks like for companies when they have these major violations is really important.
Yeah, I agree with you in terms of codification and this kind of clear line between impact and what that means in terms of compensation. There's still a lot of hoops that consumers have to jump through, though. regardless. And I speak from personal experience. I experienced a fair bit of delays traveling to the other side of the country very recently. Let's switch to our third topic. I'm curious to get your thoughts on this. We've talked a little bit about crypto winter and its impact on retail investors, but a fairly large partnership announced this week between Coinbase, which is a publicly traded US-based crypto exchange, and BlackRock, this giant global asset manager, which gives Coinbase access to BlackRock clients who want to buy crypto, starting things off with Bitcoin. Now, mass adoption for crypto depends on institutional buy-in, a lot of people tell me. Is this maybe kind of the big one, Brett?
Well, potentially. It's definitely a step forward for the crypto market at large. And the reason why, and this is what a lot of the more bullish crypto investors will tell you, is that they'll say that there is tens of billions, if not trillions of dollars of institutional capital sitting on the sidelines that hasn't been able to access the market. So this partnership with BlackRock and Coinbase will provide them the tools that they need to actually get that money into digital assets and have the security and the confidence that they can trust the partners that they're working with. BlackRock, as you mentioned, is the largest asset manager in the world, and Coinbase is the largest crypto exchange in the world. And so it makes a lot of sense. Now, how fast that money actually moves into the markets, especially with the current downturn, remains to be seen. But it's definitely a step forward in terms of creating the mechanisms to invest.
Right. Now, full disclosure, I always like to be very transparent. I worked in fintech back in 2018. I'm a C4 certified Bitcoin professional. That means I've studied a little bit of the computer science that makes cryptos, including Bitcoin, possible. I would pretty much describe myself as kind of a well-informed crypto realist. I'd like to know from you, Brett, and full disclosure, we are not giving people, investment advice, but are you bullish on crypto, bearish, or kind of indifferent?
Yeah, I think the one thing we've learned from the most recent crypto crash is that for a long time, a lot of crypto investors believed that there would be this decoupling of crypto from the primary equities market, so the stock market. And I think what we've learned is that crypto basically tracks the trajectory of quote unquote growth stocks. And so these are primarily tech companies that are publicly traded. Now, if tech companies do well, crypto has generally followed that and done well in tandem. But if those tech companies and those growth stocks are doing poorly, well, crypto goes in that direction as well. And so it's hard to see a bull case for crypto at this moment beyond some type of incremental movement upwards, which is likely to happen. But it's going to be a long time for that confidence in digital assets to come back after the turmoil that we've seen over the past few months. And so in the short term, I'm fairly bearish on crypto. And I think you can basically look at the growth stocks and the NASDAQ and the S&P 500 to get a better sense of where the markets are going. Longer term, it's a very interesting technology. I think there's going to be lots of value created. And now is really the time to figure out what those use cases are and to build that infrastructure so that in the next run up, there's actual companies that are generating revenue and profits that you can invest in, who have tokens and are in this ecosystem.
Yeah, and with understandable use cases. That was a great kind of breakdown of your take and in terms of long-term investing versus a short-term mindset. Thank you so much for your time and your insight, Brett.
No problem, man. Always a pleasure.
Enjoy the rest of your weekend. And you can get all your daily business news with the Peak Daily Podcast. It is available for free on Apple Podcasts, Spotify, and wherever you find your favorite podcasts.